Good afternoon, ladies and gentlemen. My name is Elaine Adams. Some people call me stockmom, and it is my pleasure to introduce you to Aftermarket Therapy. This is the place to talk about your trading day, talk about the market, and no matter what happens, we're gonna be alright. It is my pleasure to introduce you to Aftermarket Therapy. Hey guys, my name is Elaine, and it's Aftermarket Therapy time. Another day to go over the markets and talk about how we feel. This week has been really crazy. We've just had so many earnings. I think everybody's struggling to keep up with the news data and also just keep up with the markets in general. We've had so much volatility. Hey, you guys remember me talking about the volatility trade being the one I have the most confidence on? That hasn't changed. Anyways, we would love for you guys to comment, like, subscribe, all that good stuff, and let's get into the show. Now, normally I start my days off with a quote, and today is no different. Today's quote is from Joe Biden, as we had a very nice presidential speech today, along with a jpow speech, which I can't wait to talk about. So the quote goes like this: "If you need more than 10 rounds to hunt, and some argue they hunt with that many rounds, you shouldn't be hunting. If you can't get the deer in 3 shots, you shouldn't be hunting. You're an embarrassment." Now that's President Joe Biden. When I think about Joe Biden, I really do think about somebody who's struggled to get his points across, especially with regards to infrastructure bill and spending. He's been touted as this guy who has bipartisan agreement and can get Congress to work on things. And we've just definitely seen a stagnation in policy getting passed, especially progressive policy dealing with EV, renewables, green energy, all that good stuff. So when I think about this quote, for me, especially with regards to the market, it's like, hey, when are we going to get it right? When are we going to be able to get these jobs to the Americans so that we can officially count the reopening trade as good? And also, when can we safely and comfortably invest in these Biden stocks? So I've got 2 guests today, and I can't wait to hear what they have to say about this. First up, I have Bobby J, a bonds person who is just extremely knowledgeable. Hey, Bobby, how's it going?
Hey, good afternoon. All set to go.
So happy to have you, as well as Invest with Russ. Hey, Russ.
Hello, how's it going? Thank you so much for having me. It's nice to be here.
Awesome. Hey, so do you guys have any feelings about my Joe Biden quote? He's such a rustic person and definitely provides that sort of old school farm life narrative. Bobby, how about you?
Yeah, I mean, I think he's right. You know, we definitely do have a gun problem. We have, you know, 1 gun for every American, if not more. And I don't know how we're going to rein it in, but something has to be done. And what he said was straight to the core of the matter. I mean, you know, the argument against gun control is getting weaker and weaker.
Yeah, definitely. And I mean, when you think about the type of person who has to carry more ammunition just so they can get the thing done, I think that's like, you know, in a major way, the real concern about A, gun control, but B, just people in general and their approach to A, the markets, and B, hunting. Russ, do you have any feelings on this one?
Yeah, no, it's an interesting quote, very rustic, and as Joe Biden is, and pertinence to what Bob had to say, I would agree that it's kind of interesting to think if, I guess we're talking about gun control, that someone would need as many bullets, like you're referring to, kind of chatting about, you know, education in that regard. But for the stock market, you know, I think we had a really interesting, like, 60-second conversation before we got live here, which was don't overload on your portfolio. If you're, you know, stick with the stocks that you know, stick with the companies that you know and that you're able to do your homework on, and kind of relays there.
Yeah, no, I think that is actually really valid. I definitely preach a simple portfolio construction and knowing deeply about the things that you hold. Real quick, before we get into it, I'd just love for you guys to kind of do a brief introduction of yourselves so that people know who you are and kind of what you do. Let's start with Russ.
Sure. So my little elevator pitch. I started investing back in the middle of 2019, but didn't really get so involved with the market and retail and just kind of the community until I started working for a startup named Wolf, where I was kind of working with my fraternity brothers at the time to create a social investing platform that helped people qualitatively and quantitatively, kind of like the anti-Robinhood or something, if you will, rather than just giving people numbers. You give them more to understand. And I actually got to meet a bunch of like TikTok influencers through that, because we were doing the whole social media finance, which is now a pretty diluted industry, if you will. And I got to meet people like Austin and Priceless Tay and a whole bunch of other really great people, which helped me transition into building my own brand, which is where I am now on TikTok and Instagram. And any other social medias you might find me, like on Public, if you use the Public app, just helping people learn how to invest, taking everyday news and translating that into how it affects an industry, how it affects the sector, and overall stock market in general.
Wow, that's awesome. I really like the anti-Robinhood part of it. We're big Robinhood haters over here at Aftermarket Therapy. Bobby, how about you? Just a brief introduction, what it is that you do and how you made your way here.
Yeah, my background's in bonds and banks. I was a corporate bond trader for Merrill Lynch. I had a prop trading book as well, the first corporate bond prop trading book at Merrill. And I've traded corporates, high yield, emerging market debt. I've done research. I was a portfolio manager, and I started a company called Times Square Capital Management. And I love interest rates, believe it or not. And I follow banks. So I keep an eye on the two areas that always are the source of tremors in the, it's the fault lines, banks and bonds.
Yeah, absolutely. So kind of going back to that quote, if your end of year yield is the deer that you're trying to hunt, what are the 3 shots that you're preparing to shoot in the market, or that you already have shot and you're holding on to with confidence? Let's start with
Well, the fourth quarter of 2020 and the first quarter of 2021 was one of the worst bear markets in bonds in 30 years. And since we talk about equities so much, that move was really some kind of move, and it was an adjustment to the growth coming back into the picture. So back in March, I extended the duration of the portfolio and bought some 40-year bonds. Now the problem is, this is like sitting in a deer stand, where you could sit there all night. I'm not a hunter, not hunter. But you could sit there all night and wait and not get a shot at anything. And with bonds, you have to be very patient. Valuations are terrible. We have negative real rates. That's good for the equity guys. And, so right now I'm just waiting for September, October, because I think we'll see if this inflation is transitory or not. That is the key thing. And I'm tired of discussing it. And there's nothing more boring than talking about the Fed every day, talking about boring people. So.
Oh my God. Yeah, that is interesting. What specifically are you waiting for in September to kind of determine that inflation, whether or not it is transitory or structural?
Well, monetary policy has an 18-month lag. So all the stimulus that started into the system in the spring of 2020 still has not worked its way through the system. And we were watching bank earnings very carefully. Bank loan growth was really poor. So, that is the transmission mechanism for monetary policy. And until we see bank lending pick up and credit demand pick up, we will not know the real ultimate effects of monetary policy yet. So I want to see when that traction starts to take. And we also have fiscal policy that's still in the works. So it's not showtime yet. We haven't had all the traction hit, and we can't declare victory over transitory inflation too soon.
Yeah, absolutely. And I know so many people think that bonds are boring and are absolutely tired of talking about inflation. And I'm just, I don't care. I'm going to be the person who sat around and talked about it. But the reason why is because you can invest on this stuff. It's not as though it's just an empty conversation. I can explain to you, and hopefully with the help of Bobby and Russ too, how you were going to make money off of this stuff. Especially when we look at long-term positioning and ability to, hey, why would you or would you not buy the dip? Well, a company's ability to borrow money has a large effect on their ability to continue to be profitable, especially
Yeah,
companies with high
yeah,
need for cash flow, which are a lot of
yeah.
the growth
And
ones.
and
But
by the way, there is some yield out there. You can still get bank preferreds, pay 5% yield. So what's wrong with owning a bank preferred that you're going to get 5% year in and year out? And look at closed-end funds. Look at emerging market closed-end funds. There's a lot of tools out there that you're all about financial literacy, Elaine, and that's one thing I have a lot of respect for. And we need to uplift financial literacy when it comes to fixed income. And there are tools out there which we'll talk about where you can monitor fixed income and get some safe yield over the long term.
hey, I like safe yield, Bobby. That gets me out of bed in the morning. So Russ, now over to you, man. If your end of year yield is the deer that you're trying to hunt, and you guys, I'm not trying to have a an overall conversation about gun control with this one. It's just the Biden quote. If your end of year yield is your deer, what are the 3 shots that you're preparing to shoot, or that you've already shot in the market? What are you looking at, man?
All right. I like this question. So I'm going to take it more of an equity route and talk about a few stocks that kind of mask sectors or industries for me. So, and I'm thinking this might take us down a rabbit hole, but I am also a very big fan of Ford, Elaine. I know you are as well. So Ford is definitely one shot I'm taking, and that masks the whole EV industry. Relatively interchangeable with GM. I happen to be a much bigger fan of Ford's vehicles and the way that they're going about transitioning into the EV market. If I had to do a second shot, it would probably be Square right now. And not only just because they're dominating the small business market and also, I guess, Bitcoin, if we want to go there. But one thing I don't think a lot of people are talking about right now is their small business loan, like financial market or financial bank that they just started, basically working with all of their clients that are small businesses and giving them out small business loans. I think that's very interesting as well. If I had to take a third shot, probably be more value-based, maybe something along the lines of like Costco or yeah, I like Costco a lot. It's a good safe stock. It grows steadily and
Okay.
yeah, it fits well in my portfolio personally.
Wow, I actually love that. What's with the defensive positioning? Do you see like a need for defensive positioning in a market with high volatility like this, or just a large fan of Costco? You just like the stock?
I like Costco, and I've been in it since the beginning or the middle of the pandemic. It just scales well. It grows well. They have great financials, and they're always exceeding expectations. I'm not positive how their dividend is. I'd have to double check it, but I believe they have a dividend yield. And I'm a fan. I'm a fan of not dividend stocks, but high quality companies that grow that also provide a dividend. I saw something that was like, would you rather have a dividend stock that moves horizontally but has a high dividend yield, or like a relatively good dividend yield with a stock that's consistently increasing over time? And I go for the latter on that one. But why so defensive? I might be an old man in a young man's body in the form that like I'm looking out for my future and maybe my kids, but also we are in unprecedented times. I started investing, probably half a year to a full year before unprecedented times hit. So I kind of got to see both sides of the market to a degree. And we're just in such a weird place. And you guys just talked, I mean, we won't go back into inflation and interest rates, but we just saw a handful of stocks, the biggest stocks in tech, crush earnings and either have a pullback or like a really slight increase all the way back down to what the market thinks is like perfectly efficient. So we're in a weird place, and I don't know how much higher we have to go for right now. I think it's going to be steady though, hopefully.
No, that's interesting. I mean, for me, I definitely, when I think about opportunity in the market, and we did have it in our short conversation before this started, I'm looking at Apple and I'm saying like, I still want to invest in large cap tech. If there's 6% of the S&P, that's the 6% that I have faith in. in no ways questioning whether or not Apple can continue its profitable trend, growth in its major profit sectors. And I mean, the year-over-year numbers are just consistent, right? And not only that, for them to be raising their guidance, regardless of whether or not they have supply chain issues, means a lot to me. When we look at Facebook, Microsoft, Google, I mean, I'm big on things. So although these things are at fairly high valuation levels and looking to go higher, I mean, that is what I have faith in, because I'm seeing through the earnings, regardless of whether or not we have a COVID situation or not, Apple in Q2 still continued to grow. That is atypical in terms of trends, especially when they didn't even release anything new, right? But they're still continuing to sell the products. People are showing that they want to buy. And even when we see dips in the market right now, right, those AirPod numbers, you're absolutely right. Even when we look at major dips in the market or corrections, I mean, these dips are getting bought up. So consumer appetite is also being shown. And so I think about something like Costco, just like you, Russ, and I have a lot of faith in it. I have a lot of faith in the ability of a lot of these reopening plays. So I'm also looking at like public venues and events and wondering how they're going to turn around. Something like Madison Square Garden, something like Live Nation even. I think that there's some potential there, as well as we haven't really seen what the true appetite of reopening looks like without the scare of COVID. So yeah, I know those aren't necessarily names. They're more like sectors and in a thought and a thesis.
I definitely like what you said about Fang. I've always had this theory where like a lot of my viewers want to find the next this or the next that. And it's because, you know, a lot of my viewers are younger and they have the time to like wait 10 years for Jumia technology to become the next Amazon. But I'm always the type of guy where it's like, why invest in the next Amazon when you're searching for Amazon? Go invest in Amazon, go invest in Microsoft, in Apple. Like they're leading their industry for decades for a reason. So, you know, who are we as retail investors to think we're outsmarting the system in that regard? Like these guys exceed expectations, break records every quarter. Why would we try and like resent them for that?
I mean, I can play devil's advocate here just to add this other side to it, which is that emerging technology in foreign markets grows faster than that same technology in the American market in terms of like just growth. So Jumia potentially has the potential to grow significantly faster than Amazon. The same thing with SE Capital, Coupang. We could go down the list, right?
Yeah.
When I think about one of the ones that might be, I mean, Alibaba continues to show that they are going to sell, that people are going to continue to buy regardless of Chinese regulatory risk. But if you listen to the overall normal news narrative from Bloomberg or CNBC about investing in Chinese companies, like specifically Chinese tech, there will continuously be that fear of what happens if, I don't know, what if the government smashes down on this company? What if the US engages in a trade war? And I get that, but there you go. That's potentially the reason why.
I'm glad you brought that up, Elaine, because there's also to put on your dashboard for a shot in fixed income is to watch MSD and EDD tickers. Those are the Morgan Stanley emerging market debt funds that have corrected a little bit here with the correction that we've seen in emerging and some dollar fluctuations. And, you know, when they trade at a discount to NAV of about 9%, and you can get yields of 5 to 7%, and those you want to keep an eye on and buy them opportunistically in a correction, because at times the market will puke these closed-end funds, and that have pretty good yield. I mean, the return on those in 2020 were outstanding after the sell-off. Something with equity-like returns.
Yeah, this is insane. This thing went down to like $6. Jesus Christ, man.
And you know what? Talk about market inefficiencies, right? And the fixed income, as a portfolio manager in fixed income, you have different investors with different strategies, different objectives, right? You have insurance companies, you have pension funds. It's not so much the retail investor at all in fixed income that can wag the dog, right? It's the tail that wags the dog is the insurance companies and pension funds. And I urge everybody to keep these on your screen, be patient, and when they do sell off, you do have good opportunities there. And it's not as if you're getting bad earnings, right? I mean, you're getting just good opportunities when there's a backup in yield.
Yeah, absolutely. And I think that is actually kind of a great place to hinge real quick before we move on. So what are the major market indications that you look for when coming to form an overall opinion on the market? Hey, do I buy this dip? What do you look for? Let's start with you, Bobby.
Yeah, well, in fixed income, you look for kind of the spasm that we had earlier in this year. I mean, it's very rare that you see that kind of sell-off in bonds and 10-year rates that went up over 120 basis points and had the worst return. We do have a problem in fixed income is in that real yields are negative. And, you equity guys should thank the bond guys for that. I mean, that is what's propelling stocks. And because if you do hold a 10-year treasury, you are losing money every year versus inflation. And that is forcing people out the risk curve. And it's not a good investment. I know a lot of fixed income managers are saying they have to hold their nose and buy these things because that's in their mandate. But there'll be another opportunity to reload on fixed income.
Yeah, absolutely. Just to respond to this comment real quick. So yeah, most Chinese stocks that are in the U.S. markets are through holding companies, but they're still holding companies that hold stock in the actual company. This is a very normal thing that happens. I mean, would you also be surprised to know that most of us, even if you do hold stocks or bonds in your account, that you don't truly own them? You just own something that covers that actual stock and bond because all of them are held by a holding company, right? Like that's just how equities kind of work in the U.S. at least. I'm not an expert on other markets, so I don't know, David. I'm not necessarily negating your point. I'm just kind of adding the perspective. I don't know that that's unique or different or adds any sort of risk.
Yeah, I think there are other reasons to be afraid with what's going on with China. I don't think that's one of them, though.
No, let's go with you, Russ. So what are the major market indications that you look for when just coming to form your overall opinion and thesis on the market?
I just wait for Elon Musk's tweets. Maybe I'm a little bit too simple, but I genuinely, because it seems, at least recently, like when the days are red, they're very red, and when the days are green, they're very green. Otherwise, it's pretty flat. So what I like to do is wake up in the morning, see how the broader indexes are spanning, and see if my entire portfolio is going to bleed today, or if we're looking healthy with our swords and shields. And then if I see specific equities of mine that are down over a few percentages in one day, right down that an exceeding amount, I'm going to look for news catalysts, and I'm going to research the company and see if something came out, if there was a flaw, if there was a shutdown in Ford's case. And then if I see nothing and it just looks like, either technical analysis got the best of it or Reddit got the best of it or anything else, I'll probably attack and I'll buy the dip. And that kind of goes for like me on a day-to-day basis. And just being aware of the rotation from value to growth back to value, which seems to have happened a few times already in the first 7 months of this year.
I kind of buck against, and don't get me wrong, earlier in the year, I was one of the people trumpeting sector rotation and, you have to move towards defensive and energy and out of growth. And now that the year has continued and we've just seen these increased levels of volatility, and there really is no overall story that's easy to follow anymore, right? So when I think about just large cap tech in general, like you said, we've had some great earnings that have happened in this past week, and yet we've seen very muted response. Twitter, you guys have been talking about Twitter quite a lot over this past few months. But once again, they did exactly what I expected to see, which was more profitability for that, profitability per user, which has come in a number of ways, as well as added a number of partnerships. And we've seen regular growth, and yet they grew less than Snap, right? In terms of stock price and reaction. But does that mean that I have any less faith in the overall tech story and overall growth story? It doesn't. There have been a few names, though, that have bucked the trend of having great earnings and weak share price response. So with that said, though, one of the major, if I have to pick some indicators that I really think about a lot, I mean, an earnings week like this is something that I hold very near and dear to my heart. I really look to see things like Shopify, Yum Brands, Del Taco even, and I think about like what this says about the average consumer and their ability to continue to go out and buy. I look at the guidance for those companies, the ones that have, you know, major buy trends, and especially in Apple, and I try to make a thesis that includes who they sell to for that next quarter, informed by the fact that they're continuing to increase their production, right? As well as the fact that they're continuing to have a rollout for new models because people want to buy these things. I mean, I'm kind of stunned at $1,000 phone that we're all just doing this with no big deal, but we are. And they're not getting any cheaper. It looks like the price is going to continue to go up. So the fact that Apple has faith, I know that they do plenty more research, and I can get off of Apple. We can talk Ford, and we can talk, you know, like Ford also had an insane level of profitability brought on by the fact that they are making their truck models more expensive. It's not that they've sold significantly more than they have in past quarters. It's that their trucks are more expensive.
I was actually just reading a lot of the money they got from becoming profitable this quarter was because of the inflation in the used car department. Like a lot of their cars that are used cars actually made them a lot of their profit this quarter and not their new cars.
Absolutely. 30% growth. That's the inflation. That is the number that is dragging inflation up higher, right? Used car sales specifically, apparently. With the next two infrastructure bills coming, how do you think it will affect the market? I mean, infrastructure bills are definitely something I think about. I'm sure we're going to talk about that later. But as Biden talking about it and getting bipartisan agreement for infrastructure stuff, I'm waiting. I'm waiting with heavy anticipation to see if we're going to see that market response in the Biden stocks, right? Nikola Group went up 5% today, purely based off of the fact that Biden said electric garbage trucks 15 times during his speech. I counted, and I'm okay with that. However, Nikola is also a garbage truck of a company, right? So I'm wondering whether or not this is a valid growth proposition, and really whether or not they're going to invest in things that are sustainable and actually show true growth. I know there was a huge push for solar a few years ago, and look at what that's turned out in terms of actual sustainable jobs that have stayed for these years, right? All those people that got trained in photovoltaic cell installation, I don't see one on top of every house. It is not proliferated. So I think some government support on some of the Biden stuff and infrastructure bills would be nice, but we're not seeing them get passed. I don't know how you guys feel about that. Bobby, you holding out for the next two infrastructure bills?
No, we need the infrastructure bills to come through. I mean, it's a must. It's not a need to have. It's a must to have because we know the state of the infrastructure. We know that we've relied too much on monetary policy and not enough on fiscal policy. If I find one major fault with the Fed, they should have put their hand up years ago and said, you know, we can't do it all, everybody. You know, we need fiscal policy, and you know, that is something we need to put people to work with. And you know, my biggest fear is that we do allocate the money, but it doesn't get to the purpose and the projects that are needed. But it's absolutely needed, and it better happen.
I agree with that. Russ, how about you?
Yeah, I don't have a ton to say on this topic, but yeah, I'm gonna agree with both of you guys. I think it's the fact that it is like a need situation. What I remember from Biden when he was coming to office, discussing a lot how he wanted to replace a lot of like big government transportation, like garbage trucks, police cars, mail services, all with EV. And what I found, it's kind of what we were talking about before, even was that like Workhorse, for example, had this like done deal because of Biden, and then out of nowhere just yanked out 50% in one day, just yanked from under the carpet, no longer their deal. So I think that they're needed for our country probably, but I'm personally not making investments around them.
Yeah, but you know, to link this to the bond market, everyone, I hope that Bobby. we do start issuing some longer term debt, because the average maturity of U.S. government bonds is 2.4, 2.5 years, and the U.S. has an adjustable rate mortgage, right? We could do a lot more with infrastructure projects and start issuing longer debt, 50-year bonds, 100-year bonds, because these rates are just incredible. And that may be a signal that the Treasury doesn't think that rates are going to go up for any long period of time, because they have not extended their debt maturities. So I just wanted to throw that in.
No, thank you, man. Really, honestly, Bobby, I brought you on to be the bond person, so you're really adding a lot. I hope
nobody wants it, right? It's like,
I personally really appreciate it, Bobby. I just, almost 23-year-old.
Yeah.
Waiting.
And by the way, back to Ford. Ford is a BB credit rating. I would like to see. I'm hoping that this credit environment can do something to help Ford raise their credit rating and work on their capital structure a little bit more. Because I've been fighting with Ford for years on increasing their credit rating and showing them bonds. I used to show them bonds to encourage buyback of some of their debt that was long-term, trading at very low prices. So I hope the auto companies increase their credit ratings.
I definitely think bonds are something that needs to be taught more in school. And so I'm finding this very interesting, learning about just like your opinions on bonds. I think even if they are taught well in school, it's something that my generation really veers away from and just decides they want to be more risk adverse. They want to make 100% every year if possible. And bonds are nothing more than like a safety net in my generation's eyes. So I'm actually learning.
And Russ, it's really important to understand the time value of money, because that's really what, that's gravity, the interest rates are gravity, it's what keeps us all nailed to the planet, if you will. Yeah. And it's important for kids to understand that, because I don't know about you, but I haven't used the periodic table list this week, and that's beaten into our heads, but nothing on interest rates, bonds, and what I really like about what you're doing here, Elaine, is financial literacy. It's really my hat's off to you.
So my last question before we kind of move into our charting section of the day, which is how was your trading day? And if you didn't trade, did you add or take away from any positions? Yeah, that's really it. Let's start with you, Russ.
I did not trade today. I did make some trades yesterday when the sea was very red. I bought Coinbase, and I actually made a stock pitch about it just because they are seeing. Listen, Coinbase makes money on the way up and the way down. If you're selling, they're making money. If you're buying, they're making money. I like their valuation right now. They're trading at, I want to say 25 times EBITDA. And if I want to pull up the information now because I don't want to get into this conversation without my artillery behind me. But yeah, they seemed like they had a good valuation. They seemed like they were having good increases quarter over quarter. So I bought them in the low 200s. With needs to dollar cost average, because I had made a mistake, not when they IPO'd, but pretty shortly after. What else did I buy? I bought a share of Tesla as well because I liked their earnings, and they didn't have a huge bump after earnings, or at least they came down hot during the red day. And I bought some Ford as well right before earnings during the really red day, and that paid off as well.
Absolutely. Yeah, and for me, go for it, man.
Oh, sorry. I just remembered one more. I won't get too deep into this because I don't think it's appropriate to advertise this kind of stock, but I also invest in something called Soxel, which is a triple leveraged
ETF for semiconductors. Yeah.
Because it's like, if you're going to invest in the semiconductor industry, like, why wouldn't you just go all in on it?
Wait, hold on. Jesus Christ. Somebody said they bought that BlackBerry today and it's up 300%. Anybody got the BlackBerry news? If you have it, go ahead and throw it out there. If not, it's all good. Yeah, I mean, I've been kind of sticking to some really base trades, obviously holding some core tech positions as well as S&P. I'm long on right now, as well as I kind of have that hedged with volatility, which has continuously been one of my favorite things to do in this market. We've seen every time we've touched that 16 level, it's a rocket ship right back to 2021. And I think even then, if you're somebody who expects larger pullbacks as we continue to blast past all-time highs, holding volatility, especially as a hedge to your core positions, is something that has been really profitable for me, and kind of holding on, as well as like I'm not selling my tech. So I'm with you, man, Russ. Semiconductors are going, right? I don't see that not changing. To be honest, when I think of semiconductors, specifically AMD's earnings that happened today, just a complete blowout, right? And Xilinx as well, saying that, hey, we expect the demand to continue. They're continuing to be more and more profitable, and as long as that merger goes through, I see AMD just smashing through on this breakout over 100. So I've been really excited about semis as well, man.
You have to be.
Do any of you follow SKM?
No.
So, well, I'm not going to say much about it, but that's for a future discussion. And I was just wondering if you guys and Elaine, I wonder if you follow this, because I know it's a specialty for you, semis.
Interesting. I do not, but I'm taking a look at it now. Let's see. Somebody said they're trading MSTR today. Jesus Christ, you guys are out here. I got into an MSTR call Friday.
SKM seems like a pretty great company. They're growing really consistently. They have a really attractive price to book value. And I mean, all of their financials are consistently growing and increasing. They're also beating expectations. But
yeah,
if
communications is running for sure. Huh.
Interesting.
Quite. Hey, Bobby, is that Sharon Pete Townsend in the background?
How do you know?
Somebody put it in the comments. T.
Yeah, I took that picture of Pete at a movie premiere party years ago, and that's Grace Slick. That's a self-portrait that she did.
Wow, you're cool, man.
Well, it's kind of dinosaur stuff, right?
All right, you guys, you ready to get into a little bit of a market overview?
Let's do it.
Okay, let's bring her on up. And as usual, we love TradingView here. It's one of our affiliates. There's going to be a link in the description. I always use TradingView charts, and I hope if you are looking to and haven't already signed up for TradingView Pro, go ahead and do it with our link, because TradingView is great. I don't feel like I really have to pitch this super hard. A lot of the guests that we have on the show love it. So I hope that if you are interested, you give it a shot. With that said, I'm looking at the chart for SKM right now. Not that it really means much here, because I don't know much about a company. So even though I do, it sounds great, I'm not going to do much here. And I don't know, for me, technicals need to be matched with good fundamentals. Let's take a broad look at the S&P 500 here. Okay, so I'm in a weekly chart, kind of going up. I mean, okay, S&P, strong uptrend. For me, I look at this thing and I just say, good God, as much as we have risk, both from fiscal policy, and potentially Delta variants and all of that, what I've seen with these past earnings from Q1 and Q2 has told me that the largest 500 companies in America are prepared to play. It doesn't matter whether or not we're all locked down or whatever it is. People have demand. They want to continue spending money, and that's being reflected in companies' earnings as well as in company stock price, where we're seeing things continually go far above their 200-day moving average, really without the need for strong correction. S&P is strong.
Well,
yeah, absolutely.
Elaine, it's been impressive. It's been impressive that the rotations under the surface has not affected the overall S&P. And just something to keep in mind. I think late 2013, 14, the S&P barely had a 5% correction during that time period when there was initial talk of taper going on. So we shouldn't get too excited that taper talk is a threat.
I fully agree. Also, I love a good week when we have strong earnings, and yet on a weekly candle, I'm seeing a red doji. I mean, for me, I look at that and I say, like, I have confidence. When I look under the hood with the earnings and under the hood looks really good. I'm actually happy for a pullback. Please take some profits so I can buy the hell out of this dip, because I know where we're at. I have a little bit more confidence after we look at these earnings. If we bring it over to the NASDAQ, I mean, God, smashing around 15,000, right? Like, that's what we're holding on to with our NASDAQ futures. And it's just a strong uptrend holding over our 20-day moving average. I mean, God, a return to that, once again, for me, looks more like a buying opportunity, especially when we see that tech and growth, regardless of how overinflated it is holding at these prices, holding with the idea that they're going to continue to grow and be more profitable on a weak quarter. I don't know. How are you guys feeling about tech?
I think what's great about the NASDAQ 100 is what's the number? It's like the top 5. FANG owns 50% of their market cap. And, in the beginning of this, we talked about, am I being defensive or why am I being defensive? And I think what's interesting is when interest rates do come up, we're going to see a bottom half of the NASDAQ, probably not the S&P 500 so much. We're going to see a lot of companies fighting for their lives because of how much debt they've taken out and how that's going to replicate once we get to interest rates. But, FANG, I don't see them having that same issue. Like, they're at the top. Yeah. They have too much money in cash. They are just they're ready, and they've been waiting for interest rates. And if anything, they've probably been ready for 6 months at this point. Just ready for Jerome to shoot off the gun and let him rip.
Yeah. On that topic, I think we people like to talk in exaggerated terms. It was a huge move, right? Or there's a lot of hyperbole that goes on when we talk about the market because it's fun to be dramatic. But bear in mind that when we had rates going up in 2016, 2017, we had over 200 basis points of increases before we even got some tremors in the market. So, real rates are still quite negative. And, we have a ways to go, particularly before it does any harm to credit or high yield. So I think we can easily see taper without, and I think taper would be healthy. And by the way, when they started, hinting that they were going to move off the wait and see till 2024, the long end actually did better. And that is the irony. The market does not want to think the Fed's behind the curve.
That's an interesting
Thanks for that, Bobby. That's a really good perspective. And I do know I have a couple of other sort of debt friends who have really similar perspectives that tapering isn't going to take the bottom out of tech. I mean, what did we see today? Well, we saw the 10-year go as well as tech running, right? So it wasn't as though that particular inverse correlation has to continue. As a matter of fact, we've seen a decoupling of it since maybe a few weeks ago, which I'm enjoying. Move on over to the Russell with small caps. And at least for me, when I think about small caps, I do think about those kind of small growth companies that everybody's really excited for. The companies that we've definitely seen, or to your point, Russ, may struggle with because of the debt that they've taken on. And may not be able to continue to fund further growth and expansionary activities. Go for it.
Sorry. If we even took one step back and said, like, they're not going to go under, right? They're not going to go bankrupt. But if this company is doing so well through the last 2 years because it's a growth company, and then it has to start paying off a regular amount of debt because it's not just flying, like skating on ice here, it starts to have some friction under it. It's not going to be that same level of a growth company. And then are these retail investors or even institutional investors going to want to still be pouring money into something that has such a higher risk when you're not getting that same high reward because it's no longer that high level growth company where you're getting crazy returns on a quarterly basis?
Yeah, absolutely. I mean, I think that some people would be surprised at the stocks that have 10x'd in the past 10 years. And it's not the crazy, amazing, brand new growth companies that everybody wants it to be. It is Apple. It is Home Depot. It is AT&T, right? Like, these things grow because there's consistent demand and because they offer a product or service that is necessary. I mean, it's not mandatory like a defensive stock where people need to buy bread or something, but it is necessary. So when I think about just in terms of like exceeding growth expectations, I actually kind of go towards more large cap because it is large cap. I know that's in some ways counterintuitive, but that's where I have the faith. But with that said, the Russell has presented a great opportunity. We've been holding in this 2200 to like 2300 channel for quite some time, and pretty consistently every touch towards the bottom of that has been a profitable thing because we know people are still thirsty for investment, growth investment very specifically. Real quick, I kind of want to look at some sectors. Let's see, do I even have sectors up here? Oh man, hold on. We had some great earnings. And let's see here. What do we want to talk about for earnings? Is there any particular, any sectors that you feel really confident in? I know that you posted a little bit about cannabis stocks being a play, especially off of Tilray earnings. Russ?
Yeah, I think that Tilray proved that cannabis is still growing, right? Because that's the big question. At least for me and my viewers is like, it's not a federally legalized substance, and it's slowly, very slowly getting there. But every 4 years, you kind of have to question if it's, going to keep going, right? Because every 4 years, we have to revisit how our country feels about it. But what Tilray did is they were like, hey, we're here. Even Tilray is massively out of Canada, but even so, the industry itself is proving its worth by form of Tilray, who leads it. So what I was talking about today was like, Tilray's here now, but when I think about an emerging industry like cannabis, I also think about the opportunity for companies to step in when it gets federally legalized. My big opinion is like Marlboro and the cigarette companies. What's stopping them from jumping in as they did when they jumped in with vapes? Because that's exactly what happened. Juul got big. Mm-hmm. I don't know if it was Marlboro specifically, but one of them bought Juul, and that's now how the industry plays. I imagine it'll be similar. So I would prefer to be investing in the industry. Yeah, YOLO is one of them. MJ, there's a lot. CNBS. I would prefer to be investing in the industry where I can trust someone to be rebalancing as new players come to market, as we see the industry expand and dilute, and we can kind of get past that initial bubble and realize who the real players are going to be 10, 20, 30 years from now.
Yeah, absolutely. When I think about a sector that has a lot of growth potential, especially when we're looking towards things that hopefully we get some sort of catalyst for, marijuana happens to be one of the major ones for sure. And doesn't matter what ETF you're looking at, we're definitely down over 15, 20% on year highs, right? When we knew or we thought that Biden was going to be extremely forward towards regulation on this. Then all of a sudden you see a bunch of interns getting escorted from the White House and you're like, okay, well, I guess he's not going to be too forward.
Biden was supposed to make it, he was supposed to bring federal legalization, and he took a big step back. And that's kind of what I mean by it. Like every 4 years you hit the reset button. And that's why I don't have a very big part of my portfolio dedicated to cannabis, because even though I think, I'm relatively bullish on the idea of it becoming legalized in our country, adopting it, I just know that similar to like Chinese companies, you never know when we're going to get a president, a government, a legislation, a Senate, a House that's going to fall out of favor of cannabis and, take us 2 steps back after going 1 step forward.
Yeah. Well, who do you think will be big players in cannabis that are not purely cannabis companies?
Grow generation. I'm looking towards things that are like Scott's Miracle Grow.
Yes.
Really? Right? So I'm thinking around infrastructure around it, because cannabis doesn't have to be the profitable part of it. It could be hemp, right? Which was our nation's actual biggest cash crop before it was made illegal. And it's like, we think about all the things that are made from hemp, fabric, soap, pesticides, right? There is a large potential to capture a large part of the market without taking on specific risk from people who sell cannabis products, where I think that the taxation on it and just overwhelming legislation towards actual marijuana, like, THC products is always going to be slightly difficult. CGC, GRWG, yeah, Eric, really big fans of both. And then on top of that, I think about the Philip Morrison, right? And these cigarette companies, which are, we know that they have patents out for green cigarettes. So if I'm going to go for a company, I might go for a little bit less growth, but something that I know is going to continuously be profitable. because they've shown that they can do it in the past, regardless of regulation. I think if you've made it in the cigarette industry where regulation is strongly against their ability to be profitable, I kind of have a little bit more faith on their ability to roll out a brand that people trust. There are plenty of people that just think that marijuana is only to get high and not that there's CBD and, you know, just properties and only that. So there's something about that. I want to kind of do another sort of sector check for you guys, because there are a number of sectors that were supposed to be profitable based off of Biden and just they're Democrat stocks, right? Biden stocks, whether it's EV, and Biden talked a ton about electric garbage trucks and American manufacturing to get both semiconductors and renewable energy out. He also talked about solar, right? Is another one of Biden's sort of stocks that we expect for him to put inside of the infrastructure bill. I know somebody put in the comments earlier, hey, like I want to see the roads fixed, right? And it's like, I'd love to see the roads fixed as well as them being used as an energy source or something, but that doesn't need to happen. It would be nice. The technology does exist. Or whether it's in the energy sector, as in giving the energy sector the impetus to move towards more renewable. Anything that you guys are feeling in any of these sectors specifically as it relates to trading off Biden catalysts? And I'll pull up some ETFs while we talk about it. Let's see here.
I was pretty bullish in aero defense when
Really?
Biden was first elected. I remember making a video on it a long time, and the video did pretty well, all things considered. But yeah, Lockheed Martin, because he seemed to be pro keeping troops and pro military in that regard. And I wish I remembered it. This was, over 6 months ago now. But I had these high expectations for aero defense and specifically Lockheed Martin to do great. And I think I'm not sure if you want to pull up the chart, but I think Lockheed Martin is doing okay. But they still have a price target that's like way above where they were. I'm not sure. I think they may have struggled to get back up from where they were before COVID. But yeah, I was very bullish on aerospace as well as not solar, but charging stations. They were trying to. He said either 50,000 or 500,000 charging stations by 2024, and so I was very bullish on companies like ChargePoint and Blink, and even a few others coming to market. Oh, right.
I have a huge question about that, because it's like, yes, am I bullish on EV infrastructure? Absolutely, but at what point do we have to balance that out with the reality that none of these charging solutions have reached even a slight point where it's going to be realistic for the majority of the population to even, you know what I'm saying? Like the transition to actually using these. I mean, I've seen EV charging stations that take gasoline because they foresee a time when you might have to charge your EV thing, but you're still going to need to use a combustible energy source, because that, unfortunately, that's what we can consistently count on. Whereas like these energy grids just aren't made for everybody to have an electric car. I mean, even maybe 10% of the population, our logistics and our just infrastructure on travel and energy as it relates to travel is really weak. It has the potential to be weak. So when I think about a ChargePoint or a Blink, I kind of have to measure that. I know the companies are going to be profitable for sure, but are they really going to do what we need them to do to allow for the growth and momentum that people are expecting from EV in general, right? Like this full adoption by 2030.
Right.
Nobody's even making like internal combustion engine cars anymore. That's what I'm thinking about.
So my question for you is, it's kind of a chicken and the egg thing, because you need charging stations for EV cars. Not everyone has a garage. And on top of that, but you need EV cars to make charging stations necessary. So I'm curious, because Elaine, you're bullish on the EV sector, at least Ford and GM specifically. But if you're hesitant with charging stations, how do you see that playing out?
I mean, I just see it playing out slower than most people expect. And much like you're saying, a lot of Ford's profitability came from their used car section, right? I know I'm kind of getting into trucks just because I've been reading so much about them. But those old Fords are going to continue to make money because they're actually useful for a thing. They're, in fact, more useful potentially than something new that is dependent upon semiconductors and stuff like that to get fixed, right? There's a huge brand thing around old square body Ford and GM trucks. That's a thing.
Ford did sell. Sorry, in June, Ford did sell more Mustang Mach-E's than regular Mustangs for the first month ever.
Yeah. And with that said, I'm still bullish on EV, right? I know that this is going to come and continue, and I'm actually expecting to see more regulation and credits given towards these companies to incentivize them to build it and make it usable. It's just, in terms of infrastructure and rollout, I mean, somebody explained to me that our transportation system will take more than 5 years, more than 10 years to really be able to encompass all that needs to have the majority of the cars on the road be electric vehicles. Hey, do you guys do these trades? If Nancy Pelosi's bullish on Tesla, hey, Nancy does not make a bad trade. She hasn't made a bad trade since she got in office.
It's so
I don't bet against Nancy, that's for sure. Kind of moving through, I don't know, I'm enjoying answering some of these questions as well.
We have a question on Muni Bonds.
There you go.
Okay.
So, well, taxes are going up. Guess what? I'm hoping that we see some more financing, municipal financing, and I'm hoping that we see affordable housing. I mean, if you talk about a need that we have, the homeless situation is something we should all be very ashamed of, and we need to have housing, and I'm all for public assistance when it comes to affordable housing, because there's some areas that people are just priced out of the market, and something has to be done. You can't afford to do many service jobs in New York City and live in Manhattan. So we need municipal financing, and we need housing.
So Bobby, I have a question for you. If for municipal bonds are typically through your city, and like you said, they help you work with you with taxes. So, I only use public. It's my go-to investment, or maybe Fidelity. How am I supposed to get my hands on a municipal bond? All I know how to do is trade like Tesla and Apple.
Well, by the way, if you're not looking at closed-end funds, I mentioned the emerging market closed-end funds. You really should have CEF Connect on your screen. Have you used that at all? So it's a way, yeah, so check it out. Because closed-end funds, especially when it comes to municipals, and again, opportunistic times to buy those at 4 or 5% discounts or 7% discounts to NAV, and they offer closed-end funds of municipals by state. So, if you want California munis or New Jersey munis, because you want that break for your state income tax, which is only going to go higher, you want to use these closed-end funds, which are great vehicles for investing.
Hey,
do it on your own. You can't build a diversified portfolio by yourself.
Somebody else asks, what's the best way to start learning about bonds and resources? I know you actually gave me some stuff before the show, and maybe we can stick it in like the comments and stuff like that. Yeah, go for it. I'll see if I can bring up that.
Well, listen, go to fixed income houses in the world, BlackRock and PIMCO, and there is free research and market insights and investment strategies on there. And, just look at it once a quarter, once a month, whatever you like, and you will learn a lot. I also advocate following Rick Reeder on Twitter, who is outstanding as a bond portfolio manager, and he provides a lot of insights. But if you dig into the PIMCO and BlackRock websites, you will find breakouts on various sectors: high yield, corporate bonds, agencies, mortgage backs, everything that you need.
Awesome. That's awesome. Somebody said hold on, let's bring this up. The homeless population is growing, but thank God we have great people like Bezos flying into space for 4 minutes. Hey.
Well, did you hear about his Agree.
You know, that's Elaine. Have you seen Russ? Have you seen a movie that came out, Summer of Soul? Must watch it, about a music festival in 1969 and the public reaction at that festival when we were putting a person on the moon was, you know, exactly the same comments. You know, what about planet Earth? What are we doing for people who can't, you know, have a good experience here? I don't think you need a life-changing experience by going to the moon when, you know, when we're not all doing well at the moment here. So I agree with that one.
The only moon I'm worried about is the one that Qualcomm's going to be on. Or what happens when we finally get solid state batteries, right? Like QuantumScape has been hinting at. Like that's the only moon I'm particularly worried about. Real quick before we kind of move on, I have a question. I don't know, did either of you guys hold crypto? Do you guys hold Bitcoin at all?
I do.
Yes, a little. Yeah. Our resident expert in this house is Aniko, and she's done a lot of work on crypto. But I just tag along on her coattails. She does the work, you know, and I do have a small position in it.
Cool.
How are you guys feeling about sentiment on Bitcoin? So we saw earlier there was apparently our producer was telling me before the show started that Amazon potentially accepting Bitcoin was not true, and they released a statement. Apparently that it's not happening.
Elaine, I thought you were about to like tell me that you found out that it was happening. I was like, that was the catalyst that sent it off. I had no idea.
Well, it was the catalyst that definitely started some of that pump for sure. But I mean, okay, we'll ask Russ that. But I am one of those people who, yes, I am long Bitcoin, but I also think there's insane regulatory risk associated with this particular product. And I'm not excited necessarily. I'm not looking at it and like licking my lips. I'm not dollar cost averaging up. I'm good. I have my bet in there, and I'm going to let this thing do what it does, especially if it reaches a market cap of gold or something like that. With that said, there have been so much that these crypto people or Bitcoin people really think that corporate adoption is going to do for Bitcoin specifically. After having run some business where I had to transact multiple levels of transactions with Bitcoin and Ethereum, know for a fact that there's no possible way any company in their right mind, especially one as large as Amazon, is going to realistically conduct transactions in Bitcoin with the volatility that it has. It makes no sense. If somebody spends $1,000 and by the time it gets to you, it's worth $800 because we all have to convert it back to dollars, there is no point. I knew this, and I'm just waiting for this thing to keep pumping up so I can short it back to the hell that it came from. But how do you guys feel about the battle between positive potential corporate sentiment and relatively lukewarm U.S. government and Fed response as it relates to crypto and specifically Bitcoin? Let's start with you. Russ.
Well, you drive a hard bargain with that point, and I somewhat agree with you. I think I have two. I'm having an internal battle right now, if you can't tell, because part of me sees like for the last 3 months or 2 months, Bitcoin continually went down while more and more news kind of came out around it of whether it be companies or countries. And I know you don't care about if certain countries take it, but there's a lot of news around it that's positive, even though Bitcoin continues to go down. So one perspective of mine is that, you know, whales are controlling Bitcoin, as I think a lot of people assume. And it's hard to say that the coins movement has any like coordination or correlation with actual news until what happened with Amazon. And then I would have to agree with you, which is that unless Amazon was looking to keep all of their coin in Bitcoin, or maybe Amazon invested in Bitcoin right after their like quarterly earnings deadline hit, and then they wanted to like pump it for a couple months, just like Tesla kind of did, if you will, when they said they were going to accept Bitcoin. I didn't expect it to rocket up like this. I expect it will come back down, but I overall believe it'll find its way back up into the 60s, 70s, and 80s. It's just a matter of time.
You know, somebody sent me, and somebody put in the Crypto Maniac. I know this is your time to shine, Crypto Maniac. Tara, I'm not going to put up Doge at all, but AMP, right? There are a number of other actual smart chain capable or just coins in general that have a real use case. And it's just like, I don't understand why they would use Bitcoin when there are coins that are just better if we're talking about conducting transactions. And we will continue to see how US regulatory deals with Tether and the whole Tether issue of them issuing money that's supposed to be backed, but is backed by, I think it's backed by Hope's Dreams and wherever the rest of Nicola's fucking trucks are. So
yeah, just remember one thing: government always lags reality. And I've been saying for quite some time that the second half of this year, going into next year, is going to be the emergence of regulation in the crypto space, and it has to happen. It has to happen. And anybody who thinks that crypto was too far out of the barn for regulators to circle it, that's just crazy. I mean, think back to the auto industry over 100 years ago, or less than 100 years ago. But think about the regulation that has been piled on to autos since the emergence of the auto, right? We have insurance, we have parking tickets, we have licenses, we have registrations. I mean, that's, crypto is going to be a field day for regulators, and it will shake out a lot of the number of cryptos out there, but I don't think it's necessarily a negative for Bitcoin.
No, absolutely. And I do think that not even people, but regulation does lag behind the reality. And not only that, but we see regulation and regulators struggling to figure out how to deal with these new circumstances. So to kind of move on to a little bit of the next topic, Master back, you guys, it's back on. California, Dallas, Texas, right there are a number of places that are right back on now mask regulations. Apple is saying that people have to wear masks in all of its stores now. With that said, and we've seen a flip-flop of government regulation regarding this, mostly probably brought on by the fact that people are tired of just COVID restrictions in general. People want to travel. People want to, all the financial institutions want people to get shut up and go back to the office already. What are your best and worst COVID scenarios as it relates to regulation and then the markets, obviously, and the companies that are going to have to abide and deal with potentially panicked consumers? Let's start with you, Bobby.
Well, suffice it to say that I don't think that the pandemic was the government's most shining moment over the past 2 years. And a lot of the communication, I'm willing to do what makes other people comfortable. We could have some form of COVID for quite a period of time. I'm not against mandatory vaccinations. We've had mandatory vaccinations in the past, and I'm not against it, but I think it needs to be. I think we should all be thinking about the greater good, and not coming to the table with nobody's going to tell me what to do. I mean, that's the one attitude that I kind of have very little patience for.
Well said, Bobby.
Sorry.
It's fine. And I mean, I do agree with the idea that people are somewhat selfish when you don't want to get vaccinated. But guess what? There's 40% of the population that doesn't care. They don't care what we think. They don't care about the greater good, at least not compared to their own personal body, which is a very American topic.
I know what I did.
Not going to happen.
Shout out to my doctor, who's one of my best friends, and he's been my doctor for quite a long time. And guess what I did? I went to my doctor and asked him what I should do. I heard people say, well, I'm going to think about the vaccination. You're going to have an epiphany and a dream that's going to come to you and say, you should do the vaccination. I mean, you're trained in medicine because you have WebMD. I mean, let's be real. Go to the experts, and it's not a perfect decision. Nothing is.
Oh my God, that might be one of the greatest shout outs we've ever had on the show so far. Shout outs to your doctor. And just real quick, well, no, because I'll talk Robinhood IPO, Snap Crackle Pop, but let's hear what Russ has to say first. Best and worst case COVID scenarios, and especially as it relates to markets and the company's ability to stay profitable.
Yeah, interesting. I right now live in downtown Philadelphia, and you wouldn't know Delta variant, it exists. So I'm using my own perspective of just what I'm seeing to think that the worst case scenario isn't going to be nearly as bad as what we've seen. And whether that's because people don't want it to, my city's government or my state's government doesn't want it to go that way. I just don't foresee it. Like, there's that thought of herd immunity just getting rushed now. I saw the comment in the YouTube that was in the YouTube comments that said, like, get ready for your booster every year. Maybe so as well. I think we're going to see maybe a small drawback in the markets. It's proven, like, I think we talked about it earlier, so I won't go too deep, but the big players, it doesn't matter at all. If anything, they'll just cut expenses again and make more money because they won't have to put as many employees. Interest rates are going to stay lower longer. Like, it just seems like we're going to continue the run that we've already been on. And I don't know if that's a best case or worst case scenario. I feel like we're just in limbo right now.
That's very interesting.
By the way, music fans, I was disappointed that Lin-Manuel Miranda didn't come out with the PR campaign on the vaccine with the lead song, "I'm Not Going to Throw Away My Shot."
Oh my God.
Catchy, right?
It would have been a good one. What I think about this, I really do think about data gang strategies. Interesting. Gates are flooded. So I've been waiting to see a number of earnings that are going to tell me whether or not COVID and the lockdown really affected the bottom or top lines of profitability and growth for our favorite companies, or the ones that I'm interested in and the sectors that I'm interested in, which are primarily growth as well as a large amount of commodities and energy and stuff like that. And we've seen now 2 earnings this year kind of post big rollout for vaccination. And we've seen these companies continue to maintain a profitable status, although they're taking on debt. Although we do have potential regulatory and just consumer risk, I actually feel strong when I think about the strength of the reopening play. Now, worst case scenario, yeah, for sure. We go back into some sort of full lockdown, hospitalizations go up. They go up in the 20 to 40-year-old sector, the people who are least likely to get inoculated or vaccinated, in that 40% of people who do not want to get vaccinated. And somehow it does affect midterm profitability. But as long as I see demand in the job sector, right? Now that for me would be a really, really big tell if we continue to see people, initial jobless claims go up considerably. That would cause me to have way more fear than the potential of a pullback from COVID. If there is any level of pullback, I think all of us in the investment community know exactly what to do. We're loading up on bonds. We're loading up on stocks. I'm backing the truck up. I'm taking out a second mortgage. I'm going to go nuts because I just have pure faith in the American economy. I think that one of the things that people say a lot, or I've heard said a lot recently, is especially against crypto people, is like, are you really betting against the American economy? Is that what you're doing when you're buying this crypto, or whenever when you're expecting yields just to go up and crash the NASDAQ? Like, are you really betting against the American economy? And I think that's a troubling place to be in, where people just don't have faith, while we continue to see we're going up into the right. There we go. With that said, Bobby, I'm so happy to have you. I kind of want to do a short bonds talk. And I think it's just because, much like Russ, a lot of us hear about bonds and wonder if there's some sort of financial opportunity. And I you know what, we normally like fall off, especially if I talk about inflation or bonds. Like, I lose like 60 viewers pretty much immediately. But for the record, I'm gonna do I brought
It's a
you on here
lonely
because
life.
you're really, really informative about these things. So from your own perspective, and Russ, please feel free to ask questions. Why are bonds important, and what can we learn by paying attention to the bond market, even if we don't intend on trading it? For you, Bobby.
You're breaking up a little here. Could you ask that again? I lost you for a second. I couldn't hear.
Yeah, of course. Why are bonds important, and what can we learn by paying attention to the
Hello?
bond market, even if we don't? Oh, can you hear me?
Yep. Yep. Well, I'll give you two reasons. Number one, the risk-free rate, particularly the 10-year and even short-term rates, are the discounting mechanism for all financial assets and even for non-financial assets. It's a starting point in any analysis, and we should be looking at things with comparison to the risk-free rate, and we build risk and expect incremental return beyond that risk-free rate, and it's really important to see. Secondly, when we should keep an eye on the yield curve, because the yield curve is a measure of liquidity, and when the yield curve inverts, it's almost as if the brakes are being tapped and liquidity is being drained from the system. So it's very important to watch for curve inversions, which not only drain liquidity from financial assets, but also put the brakes on economic growth. And the third thing I think that we need to keep in mind is that we should watch credit, because every major problem that we have had in the market, including the great financial crisis, the emerging market debt crisis, and other problems that we've had, stem from credit, even the Great Depression. So credit is where it happens, and you can have stocks trade down, but when credit implodes, it's a much different matter, because investors are not getting their money back. And so you have to keep an eye on the yield curve, the absolute level of rates and real rates, and also on credit spreads. And if you don't have that on your screen, you're flying blind. You might as well just get in the car and put a blindfold on.
So can you just kind of go a little bit deeper on what risk-free rate is, and specifically on the 10-year?
Yeah,
and what
well,
that has
I mean,
to do,
in terms of risk-free rate, because I mean, the U.S. government bond is the highest credit rating of any instrument in the world. I mean, there were times in the past when other bonds traded through government bonds and presented less risk. Some people might argue that an Apple bond, corporate bond, is better risk than the U.S. government. I don't see it that way, but Apple bonds trade at a spread to U.S. Government bonds. For example, a 40-year Apple bond trades at 80 basis points over the 30-year Treasury. So it's used to discount cash flows. And once you get into the mechanics of finance and stocks and stock prices and discounting future cash flows back into a stock price, you use the risk-free rate as the mechanism for doing that discounting. So it's
So there's a potential opportunity to buy on understanding that there's a discount given the actual real rates as we compare it between nominal.
Yeah. Well, right now,
I
would say, and it has been said by other pretty smart investment strategists, that if there is a bubble in financial assets, it's in the bond market. Less so than the equity market, because now we're approaching global debt of 269 trillion, and I think market cap for all stocks is probably in the neighborhood of about 100 trillion if we markets are probably less than 100 trillion. So you can see that the debt markets dwarf the equity markets, and if there is a bubble out there, I don't see a lot of opportunities in fixed income. I think you have to be opportunistic, but I do think there is a bubble in bonds, but that bubble could go on for years.
Interesting. I have two more questions, and Russ, feel free to ask anything. So somebody put in the comments, how does the shortening impact everybody? They said that shorts have cost us trillions, shorting bonds, stocks, and Bitcoin. Do you have any opinion on that, Bobby, specifically relating to bonds? And we'll come over to Russ.
What do I say that? Say that again. If what?
So shorts. I believe the idea behind this, and Nicole, correct me. Well, long story short, that shorts are costing the market because maybe let's talk about short pressure, maybe. Nicole, if you want to clarify your question. But do you think that shorts in general and short sellers have an impact on the overall bond market, or is this more of a natural function of
short sellers in the bond market or short sellers in the equity market?
Let's start with bonds and then go over to equity.
Yeah, I mean, it's really hard to short bonds. When I sat down on the corporate bond desk, I remember I shorted Mid-Atlantic bank bonds, and because you have a negative carry for bonds, and being, shorting the TLT is a very difficult trade to do, because if you're shorting the security, you have to pay the dividend. Just like if you short a high dividend stock, you end up paying, you pay the dividend. So you have a negative carry trade that works against you, and shorting high yield bonds is kind of a painful trade because it's a negative carry trade. So that's,
I had no idea.
Yeah, that's an important aspect. I think you're not a short seller, Elaine. Is that?
No, I mean, I trade convexity.
Right.
Sorry, volatility.
You're much too smart to seller.
Yeah, I mean, so to Nicole, to answer your question, I don't think short sellers have much of a negative effect on the market at all. I think it's a natural function. We have longs and shorts, and you want to have the ability to balance and hedge a position, whether it's off delta, alpha, beta, whatever medium that you're concerned on, sort of having some sort of hedge. Shorts allow for that. Now, whether I'm shorting the actual market or holding something like a inverse ETF to kind of carry on that, I think there's a way to do it that doesn't incur quite as much risk as fully trying to naked short a company, which is specifically what Bobby's talking about with holding on to a short of some company and having to pay a dividend, right? Like, so there is a negative carry on that. I could see that being preventative on a large scale to affect the market. And on top of that, if you like what happened with GameStop, if you like the AMC thing, which I don't care, if you hold a stock like Rocket Mortgage or Palantir or something like that actually does have a fairly high short ratio, these are great for those of us that are holding, because we know that we're going to get these nice short squeezes every once in a while, and that represents a great opportunity to maybe take a little profit off the top. That we kind of know consistently happens. So I'm pro short sellers personally. Yeah, for sure. If you're somebody who just day trades and that's all you do, I could see that being really problematic. But in general, shorts are an absolute part of the market. And Nicole, yeah, like when I think about the bond market, I mean, this is one of the largest markets, right? Like there's no one person or group or fund is doing something to this market that is affecting it negatively on a scale worthy of saying it's being manipulated, and then I'm worried about short sellers. But Russ, I'm curious if you have an opinion about that.
No, I don't. I wish I knew more, and I'm not going to sit here and try and bullshit. This is above my pay grade, but I'm trying to learn. Like I feel like I'm now watching your guys' podcast because this is fascinating to me, especially getting into the complexities of it. But unfortunately, no value added.
Yeah, and by the way, most fixed income investors are measured against an index, or they're measuring liabilities. So if I were to take you on a tour of a fixed trading floor, it wouldn't look anything like an equity trading floor. The conversations that you would hear, whether you were sitting on the treasury desk, the corporate desk, emerging market desk, the mortgage desk, it would be a whole different world. And it's a foreign language at first. It took me quite some time to learn that. And I sat on a trading floor for quite a long time. And but it's, it's the bondholders by and large are matching liabilities. If your insurance company, the insurance that you have, the insurance company is investing in bonds to match the future liabilities that they may have to pay out to you. Same with pension funds. So it's not the incentives, the objectives, the way they invest. I mean, people really don't short bonds, if you will. They may change their allocations, but they don't really short bonds.
It certainly seems counterintuitive to short bonds, at least from what I've learned about bonds. I mean, the whole point of bonds is that they're long, they're consistent, they're safe. If I was shorting something, I want to short something that's volatile or
and you would move your risk around, right? You may say, well, I don't like the long end, so I'm going to go hide in the short end.
Yeah.
Or you may reduce your high yield allocation. But remember, the fallacy that we always fight is for every security out there, somebody owns it. There's no like pile of orphan securities that nobody owns, right? And so when they say there are no buyers, that's just the kind of lingo that use.
I mean, I think about sorry, my bad. I didn't mean to cut you off, Bobby.
No, you didn't. You didn't.
Okay, well, when I really truly think about like why would people short the bond market? Well, it's because we expect yield rates to rise, and as yield rates rise, you're gonna lose the profitability side, right? Like so that is maybe what people are thinking about when they're shorting the bond market. But as I understand it, there's really a lot more to consider when you think about doing a short like that. And just because we expect yield rates to rise towards 2%, that doesn't necessarily mean I expect to see the short end of the bond market continue just to purely suffer. Bobby, do you have any thoughts on that?
Yeah, I mean, again, how would the average retail investor short the bond market? They may go out and short TLT, but and I'm trying to see what the short interest would be in TLT. I'm not sure it's up here. But that's just minuscule in terms of the entire bond market. So I think the discussion about shorting bonds is not the same. It's not at all the same concept as shorting stocks. And
1.8.
Yeah,
is a short interest ratio.
Yeah, so I mean, and TLT is only a fraction of the U.S. Treasury market and long bonds. What is the market cap of TLT? But it's again, you can't take the equity concepts and apply them to the bond market because they just don't hold.
Right, they're just considerably more.
And I'm sure I made everybody more confused, but it is a separate language. It's a separate, and there's a lot more math in bonds than there is in equities.
Oh my God, you guys. All right. Well, this has been an insane day, Bobby. Thank you so much. And thank you, Russ. And thank you to everybody who was in the comments asking questions. If you really are super opinionated in the comments, I say it every show and nobody does it, but I'm challenging somebody, like, reach out to the DMs. If you want, I will let you on the show. Like, I just literally want to talk about the markets and talk about stocks with people who are knowledgeable and have a great viewpoint. If that is you, go ahead and hit us up because we do love to hear other people's perspectives. With that said, I kind of want to roll out the red carpet and close it up. So let's start with you, Russ. If you just have any one take that you want people to come and get away from from you, especially as it looks towards the markets. And then what are you working on, and where can people find you in the future?
Definitely. Well, first, it was an honor getting to share a stage with you, Bobby. You are an expert, and I've tried to learn as much as I can here. So thanks for being a part of this with me. But no, thank you, Elaine. This was a ton of fun, and we made it. So, if you ever want to follow me, I'm on Instagram and TikTok at Invest with Russ. If you ever really looking for a place to collaborate with me, ask questions, hear my stock ideas, my opinions, my literal stock pitches, that's on a new app called Finery. It's my investing community, totally free to join. Come ask me anything, be comfortable there, because that's really what my channel is all about.
It's so awesome. And for you too, Bobby, what are you working on? Where can the people find you? And what's one last concept that you want people to hold on to if they hold on to nothing else from this show?
Yeah. Well, I think the concept is always keep the yield curve on your desk and know the shape of the yield curve, because I think we're pretty safe in the equity markets until we see a flattening or an inversion of the yield curve. And, it's kind of like if you had to go to the doctor and get one measurement, whether it was your blood pressure, your heart rate, or something like that, I would say that pressure of financial markets, and it's important to keep in mind and use that as your starting point for learning about fixed income and how it is the oxygen of financial markets. I think the thing I think we're all facing is, do we think inflation as measured by government officials is accurate? Because I think there's a lot of people in this country that think that the cost of living has gone up a lot higher than the low inflation numbers represent. And I think that's going to be one of the biggest policy and political discussions over the next 5 years.
Wow. I have a thought because Nicole's asked this, and somebody else asked it too. I don't know who. Robinhood IPO. I don't buy IPOs. If anybody gets one thing from me during this, it's get out the hood, because Robinhood sucks. I don't care how many, fuckboy like cowboy investors are gonna buy this thing the day it comes out. I'm gonna wait to hear in earnings, because that's what investment's about. It's like actually using information. And I don't buy IPOs. There's statistically, there's actually no value to doing so. Yeah. After the lockup period, we tend to see prices below IPO, or at least retouching that if it even goes over. Coinbase was a great example, right? So, hey.
You're so right, Elaine. You're so right. Yeah. I mean, there's so much hoopla and marketing and sales talk that goes into IPOs that, it's that is a very astute position to take.
And I wouldn't say I'm very bullish on Robinhood even post IPO, to be honest. I think they have a lot of barriers to jump over, and it's going to be tough. I think I would love to read a couple reasons real quickly before we close out. One, 15% of their Q1 revenue came from transactions involving Bitcoin and 6 other cryptocurrencies. Of that 70% of their Q1 revenue, 34% come from transactions in Dogecoin alone. They saw their biggest increase in user growth during the COVID era. And I can tell you from personal experience on my TikTok channel that there has been not as much hype around investing now that the first round of COVID is coming to a close, if you will. Yeah. Also, they're showing a serious crackdown on meme stocks through like the SEC chairman considering new rules around the gamification of stocks, which really affects Robinhood. They also have shown weaknesses by way of outages and trading halts in the past, which has resulted in lawsuits and fines. And you have to be careful of the raising interest rates with them as well. So I wrote that in my Finery page, not to drop again, but if you're interested, that's where it came from. It came from my Finery page because that was a huge topic of discussion with them going public tomorrow.
That's awesome, man. No, thank you for sharing. I hope people follow your Finery page. It's all good. This is the time to pump yourself. I totally invite you guys on to share what you do. I think you're amazing at what you do, and you add value to the community. I'm so happy to have you. I'd like to thank Benzinga for giving us this platform. We always have a good time here. Hey, you guys, check out TradingView. Really love them. We've got a link in the description. And with that said, I think we're going to close it out here. So I hope you guys have a great day, get some due diligence in, and we'll hear more economic and earnings data tomorrow and get prepared for the next week. And I will be talking about indicators and some more kind of tradery stuff next week. So that said, my name is Elaine Adams, and I am complete. Hope everybody has a great day.
Bye, everybody.
Thank you, everyone.
Thank you.
Good afternoon, ladies and gentlemen. My name is Elaine Adams. Some people call me Stockmom, and it is my pleasure to introduce you to Aftermarket Therapy. This is the place to talk about your trading day, talk about the market, and no matter what happens, we're gonna be all right. It is my pleasure to introduce you to Aftermarket Therapy.